Hello, good evening.
Good evening.
Please, how are you doing?
Yeah, we are doing well.
Fine, and you?
And how is studies going?
Oh. We are on.
Okay. I'm sorry about yesterday. I don't know if you guys joined using the wrong link because I didn't see anyone in the meeting, I mean the waiting room when I went to check. So
Ah,
I'm very sorry.
okay.
All right. So we are going to continue our revision. All right. So yesterday we looked at um, the first chapter, which is strategy, stakeholders, and mission. We looked at environment analysis. We looked at competitive forces. We looked at internal analysis. We looked at competitive advantage. Hey, Carlos. We looked at um, methods of development, strategy implementation, functional strategies. We looked at identification and assessment of risk. And lastly, we looked at controlling risk. Today, we are going to look at the remaining chapters on ethics, corporate governance, financial management, and I think that will be all, yes. Then we start looking at the case. We will read the case and start the analysis. And please forgive me of the background noise. Oh, sorry. Okay, so let's start. So today we are going to look at ethical theories. That's where we are going to start from. All right. So we started looking at some of the overview of ethics. We looked at descriptive, normative, and meta ethics. We have looked at the definitions of these. We went on to look at the fact that people or individuals can have their personal ethics. Businesses also have their ethics, and also professionals like accountants, doctors, lawyers also have their ethics. So we explain all of these. We went on to look at ethical dilemma. We said that sometimes there is some sort of conflict between our interest and the interest of another party. All right. So it kind of makes it difficult for people to make objective decisions. Okay. We said it's also called moral dilemma. And as accountants, we should act morally when we are encountered with anything. Okay. So we realize that ethics might not necessarily or is not necessarily law, right? Because laws are what is being inscribed in our constitution, in our regulations, in our policies and all that. Ethics might not be written. Okay. So sometimes some things might be legal, all right, but might not be ethical. Um, all right, so I think the examiner sets a question on why the study of ethics is important for accountants today, some time ago. The fact that accountants are part of a particular body, all right, so we are part of ICAG, so we should do what is expected of us as accountants. And it's because of the public interest. When you are auditing a particular company, right, a lot of people have shares in the company. So there is that sort of public interest. in what you are doing. So you have to abide, or you have to study ethics to know what it is and how to abide with them. Okay. So we went on to look at the consequential theories and the non-consequential theories. We said that the teleological theories or the consequential theories are the people of the school of thought that something is moral if its resource is good, right? So if you do something, you are morally right if what you did has a good result or a good consequence. Okay, so we discussed the utilitarianism, the ethical egoism theories. So with the utilitarianism, we discussed that this is where people think that what the actions are right because it benefits a lot of people. All right. So the Robin Hood theory, or that mindset that you can steal, okay, you can steal, but use the proceeds from your stealing to take care of people who are in need, or to give it to orphanage, to give it to charity. The fact that you have given the money to charity means that you are doing what is good. All right. So um, that is utilitarianism. All right. So we also have ethical egoism. Here, we are not looking at the action benefiting a lot of people. We are looking at the fact that that particular action is benefiting one person or an individual. All right. So there is this ego in what we are doing. So it's in the interest of that particular person. Okay. We said that people who have these mindsets or this school of thought will always think about shareholders because they will always try to make value for shareholders, and they are profit minded. Okay, they are not going to think about any other person because they want to care about themselves, because they think that what is morally right is everything or anything that will benefit the shareholders. So even if they will take shortcuts that are legal but not ethical, they will do it for shareholders to benefit. We said that it is often difficult to predict in advance what the consequences of a decision or action might be. What is right or wrong is based on the results. So the results will show whether it is right or not right. It is a theory that can be used to justify acting in self interest. Obviously, someone will go and steal and they will start justifying that I was hungry and I was this and that. So we also have the non-consequential theories. So these are not based on results but actions. Remember, the first one was based on your results, okay, but this is based on your actions, not results. So here, these people or this school of thought believe that no, it doesn't necessarily have to do with the results of your actions, but the action itself. So if you are stealing to give it to orphanage, it is still wrong because you are stealing. All right. The fact that you are giving it to orphanage, which is good, doesn't mean what you did is good. So it's still wrong. So that is um, the non-consequential theories. So it can be difficult to accept that a decision or action is morally right if it has undesirable consequences. Right. Sometimes if some of us copy in exams, all right, we copy in exams because we don't want to fail, right? So it is difficult for us to accept that we are going to fail. So even though we know that we are not supposed to copy, we will copy because we can't accept to fail, right? So sometimes it is difficult to stick to what is right. It is difficult to stick to what is right. All right. And also the other thing is that what action can we say is right? That's the other criticism of this theory. What action can we say is right? Because what is right is based on a lot of things. Something can be right in Ghana, but might not be right in Canada. Recently, Canada passed a bill into a law to um, regularize the use of cannabis, so they can smoke to some extent. Do you understand? So that is acceptable there. So if the person is acting like that, the person feels like it's acceptable, right? But that same thing is wrong when it comes to Ghana, right? So defining what is accepted is also very difficult under this theory. We also have situational ethics, which is the school of thought that says that what is right or what is wrong depends on the situation. So we don't really have a strict jacket on what is wrong or right. The situation will tell what is right and what is wrong. And that brings us to relativism and absolutism. Absolutism says that if it is wrong, it is wrong. If it is right, it is right. We have standards that are there, that whatever action that you take, you compare that action to the standard, right? Absolutism. We have relativism, which says that no, we don't agree with the absolute view of things. Okay, here they don't think there should be a standard, or they don't think there's a standard for wrong or right. And what is right or what is wrong depends on what society accepts at a particular point in time. Right, and this is the thing that is ruling at the moment. So it can be from descriptive, it can be normative, and it can be also religious. It can also be historical as well. Okay. Ethical subjectivism is also related to relativism. So this is also based on the view that what is wrong is what people think is wrong, and what is right is what people think is right. So what community accepts as wrong is what is wrong, and what they accept as right is what is right. This is also a likely examinable question because the examiner has been setting questions on this area. The Kohlberg stages of moral development. Okay, so we have 6 stages here. We are going to look at each of them. These stages are grouped into 3 levels: the pre-conventional level, the conventional level, and the post-conventional level. So stage 1 talk about obedience and punishment. The pre-conventional level is likened to children, right? So we have obedience and punishment. We have self-interest, which is individualism and exchange. We have interpersonal accord and conformity, and maintaining social order, which is part of the conventional level. We have social contract and universal ethical principles, which are part of the post-conventional level. So, um, as I said, if I mentioned anything and you don't have any idea, please note it down and read it on your own. But if you had but has forgotten, please look at it as well. We also learned about the Hens dilemma. We took this case and we discussed, okay, about a particular man whose wife was not feeling well. So she had cancer. She was about losing her life. This man went to a pharmacist who had a cure to the cancer. The cost of production of the that cure was $200, but the man was charging 2,000. This guy had 1,000. He told the pharmacist to take the 1,000, but the guy said no. So this guy broke into the pharmacist's room and stole the medicine for his wife, right? So here, the consequential school of thought will argue that Hens was right. He was right because the pharmacist was selling way above the cost of production. The pharmacist wasn't willing to accept initial payment of the money. And the fact that at the end of the day, the wife is going to get healed. That is the results. You get it. The fact that at the end of the day, the wife is going to get healed. He was right. Right. But the non-consequential school of thought will also argue that irrespective of the results, he was wrong. All right. So we looked at the criticisms of the Kohlberg's ideas. We said that it might not be real, okay, and it can also have cultural bias. So a particular man called Carroll in 1982 also suggested that it is gender bias. It is skewed to just males or men and not females. We looked at certain ethical decision models. We looked at Tucker's 5 question model, which says that whenever you are faced with any ethical decision or any situation, you ask yourself, is it possible? Sorry, is it profitable? Is it legal? Is it fair? Is it right? And is it sustainable or environmentally right? Okay. So if your answer is yes to all these questions, then the decision that you're taking is ethical, right? We also have the AAA model, which is the American Accounting Association. All right. So this one also have certain questions that you have to ask yourself. What are the facts of the situation at hand? What are the ethical issues at hand? What moral principles are relevant to the particular decision that you're about to take? Are there any alternative courses of action that you can take? Which courses of action do you think is best? And what are the results of each of the alternatives? What decision do you take? So these are the questions that the American Accounting Association also wants to ask when you are encountered with an ethical dilemma. So this is the end of the chapter 11. Moving on to chapter 12, which discusses ethics and social responsibility. Right. So we looked at this. We first of all looked at the relationships that exist between professional and their client. So as a professional accountant, the relationship between yourself and your client can be an agency relationship. It can be a contractual relationship, a paternalism relationship, and a fiduciary relationship. Those of you who had the more questions, I think we had the questions from this area. So please look at it and look at what each of the relationship mean. We also discussed some theories. Please take note of these, the theories, because if you remember when we looked at the syllables or the weightings yesterday, we realized that some of these might appear. So we have the shareholder theory, we have the stakeholder theory, the social contract theory. We also discussed ethical stance according to Johnson and Scholes, which says that some organizations will take a stance of maximizing short-term benefits of their shareholders. So any decision that they will take will seek to maximize the interest of shareholders within a very short term, right? A company can also decide to take a stance which will maximize the interest of shareholders in the long term. So both of these two are maximizing the interest of shareholders. One is in short term, the other is in long term. This one recognizes that there are other stakeholders around that we have an obligation to them. The last one is being a shaper of the society. So here they really think about the society and how their actions and their activities affect the environment. That's shaper of a society. All right. Okay. So we went on to discuss this classification by Gray, Owen, and Adams. Okay. So this is something that has also featured in the examiner's questions in previous settings, right? Where we have positions of directors on social responsibility. Okay, so we talked about pristine capitalists, okay, which have the idea that the responsibility of a company is to make money for the owners of the company. Nothing much, nothing more, nothing less. We also have the expedients, okay, who also think that their responsibility is to maximize the value of shareholders. In as much as they want to do that, they have created some allowance for other stakeholders. So these guys are not like the pristine capitalists. Even though they have recognized that they have to satisfy the needs and the interests of the shareholders, they have created a room for other stakeholders that will take care of them. We have the proponents of contracts, which also have accepted and acknowledged that they have a social contract with the society. So they will do things that will solve the needs of the society. The social ecologists are also like the proponents of the social contract. Okay, but they are all very, very much concerned about the environment more than the proponents of the social contract. We have the socialists who believe that no, there shouldn't be anything like privatization in the world. Every company should be owned by the government, because when it's like that, the companies will take care of the environment, which is not necessarily true. We have radical feminists, which also proposes that, or who also proposes that no, men have been ruling companies, they have been governing companies for a long while and nothing has been happening. So let's bring on board women, because they are not harmful, and they are compassionate and careful when it comes to running things. Okay. We have the deep ecologists, okay, which these guys are extreme opposite of the pristine capitalists. So they believe that human beings have no greater right to exist than any of the form of life. So they go into details of the human life. They think about even the animals in the environment. Okay. All right. We have cultural context of ethics. We discussed culture, ethics, and CSR. We looked at the cultural web of Johnson and Scopes, which we had already looked at it. We discussed the 6 elements that make up the culture of a particular company. If you remember, we spoke about this yesterday. Rituals, stories, symbols, where we said dress code, the power structure, organizational structure, and control systems. We discussed Edgar Shane's 3 levels of culture. We said we have the outer skin, the inner skin, and the heart. The outer skin is the things that you see when you go to a particular company. Even as a visitor, you'll be able to see that, oh, this is a bank and they wear suit every day. So that is the outer skin. We have the inner skin, which is the ethical stance of the company. Then we have the heart. Okay. So this is the attitude of the employees, their assumptions, and other things that are guiding the operations and the activities of the company. So these might not be necessarily written. So the rituals that we discussed might be part of the heart. Okay. So that is from Edgar Shen. As I said yesterday, please try as much as possible to know the names of the individuals that propounded the theories. Okay. Let's look at professional practice and code of ethics. This is a very interesting topic for accountants, because we have been seeing it a lot, where we discusses ethics, the principles of IFAC, and other things. Okay. So as we said, as accountants, we have to act with integrity. We have to act professionally at all times. So we have these we can skip. All right, so let's look at the nature and purpose of corporate code of ethics, where we said that we institute code of conduct in companies to manage compliance and also to manage the relationship that we have with stakeholders, right? We also do that to create value for the organization. So code of conduct are basically written documents that companies use. All right. So they write their ethics, their values on a particular book or on a particular sheet so that employees will look at it and it will guide them as they go on their ways in the organization. So some of these, some of the code of conduct might be general, so it will cover everyone. And we have others that deal with particular stakeholder groups, okay, like acting at all times with integrity, protecting the environment. These are not skewed to certain stakeholders. They are values that everyone has to have, okay. We have the ones for stakeholder groups like employees, customers. There has to be some form of fair dealing with customers. So far, I haven't seen anything about this in the case. But as I said, anything can happen. We also spoke about whistleblowing, where we said that it's a channel where individuals can report illegalities and unethical behavior through those channels. We spoke about the problems with whistleblowing, where we said that sometimes someone will go and report you because they have a problem with you. So you might not have done anything wrong, but the person will go and report you because maybe you got a promotion that he had to get. Okay, all right, all right. And we also said that sometimes the companies might not protect the identity of the person reporting. Right? Imagine you reporting something and everyone will be looking at you in the organization that you're a snitch. You get it. You might feel awkward, you might be stigmatized and all that. Okay, so a proper whistleblowing system should protect the identity of the person blowing the whistle. So yes, there's the IESBA Code of Ethics for professional accountants. As we know, we have integrity, objectivity, professional competence, and confidentiality, professional behavior, right? We know all of these. We know when accountants are supposed to disclose, even though you have a confidentiality principle with your client, there are instances where you have to disclose information without necessarily contacting the client. Okay, so let's look at all that. I wouldn't I wouldn't speak on these because we already know them already. So we also discussed nuclear. I'm sure most of us have seen this, especially those of you working in the regulatory sector or environments that are highly regulated, non-compliance with laws and regulations. So we said that sometimes people do certain things that are against the law. So once again, there should be whistleblowing policies for individuals to report. It can be money laundering, it can be nepotism, stealing, and all of that. Bribery, false accounting, fraud. Sometimes you see your fellow or your colleague undertaking a particular fraud. How do you report it? All right. So we also look at ethical threats and safeguards. Okay, so this is something that we have also been doing, especially in our professional journey, where we learn about the threats to the principles of or to the fundamental principles and how we can safeguard them. Right. So once again, ethical conflicts or um, moral dilemmas are here. We have rule-based and principle-based approaches to ethical conflict, right? So we can't set rules or laws for these circumstances, right? Because it might be different. We have different values, different cultures. So if you have an international standard on these, it is going to be complicated and difficult to employ in your day-to-day life as a professional accountant. Okay. Because of that, companies and institutes, they opt for the principles based. Okay. That one, they will give you a general principle that you can apply. So you can use it and apply per the circumstance that you are going through or per what you are going through. So these are not necessarily laws. Okay, they are not necessarily laws, but they are guidelines or general principles that you can look at and you can use that to um, resolve anything that you are going through. So we have um, how we can deal with ethical issues or ethical conflicts that come our way. You identify the threats, you evaluate the threats, you respond to the threats, and if the suitable safeguards cannot be applied, more drastic action, if needed, should be taken. All right. We have the threats which we are all aware, the self-interest threats, the self-review threats, advocacy threats, familiarity threats, intimidation threats. This is something that we are familiar with. So let's move on. All right, so we have safeguards that are instituted by legislation, the accountancy regulator in the particular country, or any regulation instituting the safeguard. For instance, we are all going through this ICA document because because of this. And this is a safeguard. Some of us knew or got to know about ethics when we are learning this paper. Do you understand? So all these things are safeguards that is created by the accounting profession. So we have CPDs where, once a while, you see when you guys chatter, hopefully, you're going to see ICA sends you a CPD, right? A training that you enroll on. All right. So they do all of these to remind you of the ethical principles, to remind you of the standards and all of that. You remember that one of the ethical principles is professional competence and due care. So they organize IFRS trainings, ISAT trainings, and a whole lot of trainings for chartered accountants. Okay. All right. We also have corporate governance regulations. We have professional standards like the IFRSs and the IASs. All these are safeguards that is created by a legislation, a regulation, or the accountancy profession. We also have safeguards that can be created by the work or the environment that we are. All right. So if you have a sound internal control system, that is a safeguard that will deter a lot of people from doing certain things. Okay. Right. We also have code of ethics for companies. We have whistleblowing policies and procedures for companies. Okay. So let's move on quickly to the. I want us to start looking at the case. So we have the models for resolving ethical conflicts. So IFAC is saying that whenever you are in an ethical conflict, you recognize and define the issue at hand. You identify the threats that you are having at the moment. You assess how significant the threat is. All right. So after your assessment, you'll be able to tell if it's significant or not. All right. If it is not significant, IFAC is saying that reassess the threat. Okay. Second time to confirm that it is not significant. Then you make the decision about what to do. All right. So we also discussed corruption. where we said that an individual using their power or any responsibility that they have for private gains. So we spoke about bribery. We discussed the social impact of bribery. We said it has political cost, it has economic cost, social cost, environmental cost. We looked at ways to reduce or curb bribery. We said that if we have a strong leadership, if we have fair reward for the job that we are doing, if there is transparency, if there are clear policies, all of these are going to reduce bribery. We learn about anti-bribery legislations. One that we said is from the OECD. We discussed that Ghana do not really have a substantive anti-bribery legislation, but there are other things that we have that deter people from bribe. So we talk about the Criminal Code, the Public Procurement Act, the Financial Administration Act, and the PFM. That's the Public Financial Management Act 2016. Spoke about the other forms of corruption, money laundering, embezzlement, theft, fraud, extortion, and blackmail. So all of these are things that we can do. We went on to look at social and environmental footprint. This is where we discuss sustainability reporting and all of those. Okay, so we spoke about environmental footprint, if you remember. We spoke about carbon neutrality, social footprint, social ecology. We spoke about sustainability and accounting for sustainability. Okay, where we discussed sustainability development. We discussed the triple bottom line reporting, where we said that here our report is not just going to be or based on our economic indicators, but our environmental indicators, looking at how well we have performed in terms of our carbon footprint, in terms of our carbon emissions, and all that. We also have social indicators looking at um, child abuse and anything that can affect the company from the social viewpoint. We discussed about the weakness of the triple bottom line. We spoke about balance scorecard once again here. We said that there is sustainable balance scorecard. So here we have a component called so we have a component called a sustainable component, which is adding to the four components or four perspective that we already know. All right. To measure how well the company is doing. Okay. So it is called the non-market perspective, which is not based on market conditions. If you can see the financial perspective, customer perspective, internal perspective, innovation, and learning are all geared towards the company becoming um, or having a lot of market share. All right. So the non-market, which is also known as the sustainability perspective, look at how or the performance of the company in terms of their sustainability. We discussed about sustainability assessment model and the full cost accounting. So with the full cost accounting, we said that we are not only accounting for the financials that we do, that we know, all right? So we will do accounting, but this accounting will take into consideration our environmental footprint, all right? So we are going to allocate some sort of quantities or some cost to our social indicators so that we know that this is how much we are incurring with respect to our carbon emissions. This is how much we are recurring, or this is how much we are spending in terms of um, certain indicators. So it might not necessarily have monetary values, but for the purposes of the full cost accounting, we are going to assign monetary values to these items. We discussed the environmental management system. This is ISO 14000. We discussed the environmental management accounting techniques, social and environmental reporting, and also environmental audit. while you guys are learning this, please take into consideration IFRS S1 and IFRS S2. You never know, even though it might not be part of the old syllabus, because it's a current issue the examiner might bring in. We went on to look at FM. This is a topic that I didn't really spend a lot of time on because of our background in financial management. Okay. So we discussed the nature of financial management, how it is different from management accounting and financial accounting. We've also learned about or looked at the relationships. All of these, I think we even skipped. We went on to look at financial objectives, where we said that usually companies set the profit objective, okay, that they want to make this amount of profit every year. They want to increase profit by 10% every year. Okay. We also spoke about the objective that the company will maximize the shareholders' value. Okay. All right. So as we said, maximizing shareholders' worth, maximizing profitability, maximizing growth in EPS, that is earnings per share. We discussed all of these. We went on to discuss the stakeholders that we know. We spoke about all of these people. We have been seeing these guys a lot in this paper. We spoke about the conflict between different stakeholder objectives. Yesterday, I even gave an example about the fact that bonus being paid to employees is a contradiction to the interest of the shareholders because it's going to reduce the profit that is available to them. We looked at the agency theory here, where we said that because of the separation of ownership and control, we have what we call agency theory. This was propounded by Jensen and Macklin. This agency theory will bring agency conflicts. So we spoke about moral hazard, effort level, where we said that if managers or directors have interest, they have shares in the company, they might do well, they might do better than they are or than they would do if they do not have any shares. Spoke about earnings retention, risk aversion, and time horizon. We went on to discuss the agency cost. We spoke about cost of monitoring, the cost of bonding, and also the cost that the stakeholders will or the shareholders will incur when the directors make a decision that is not in the interest of the shareholders. So these are the three agency costs. Bonding cost. So the bonding cost is you giving the directors or the managers more money, more cash, more incentive so that they act on your behalf. They act in your interest. Bonding. So you are trying to bond with them. The other one is that after shareholders have given the control, the governance to directors, they might act in a way that is not in the interest of shareholders. If they do that, the stakeholders might incur certain costs, okay, right? So those costs are what we also talk about here. We also have the cost of monitoring. Now, if you bring the directors, you have to monitor them. How do you monitor them? You bring external auditors to check the accounts that they have prepared, and you pay the external auditors. So that's an example of that as well. So we also discussed how to reduce the agency problem. Give them more money. If you are giving the directors more money, they might not act in their own interest. How do you do that? You can even give them some shares, share options, share awards, and all that. Farmer and Jensen, which we are going to see when we are discussing corporate governance, also said that if there are independent non-executive directors, it can also help you reduce the agency problem. Independence non-executive directors are directors who do not have anything to do with the company. So they are not resident employees of the company. They do not have shares. They do not have any affiliation with the company. They are not managers of the company. They are not management, and they do not have any affiliation with the company. So they are independent and they are non-executive directors. Okay. So how to measure financial objectives? This one we know. So the normal ratios that we know, ROC, ROE, and all of those. We also looked at the salary structure of the senior executive and the directors, their annual rewards that we give them. So usually when they're able to achieve their targets, we give them money or the company will pay them their basic salary. They also have some long-term performance of incentives like share awards and share options. We discussed the difference between share awards. So share awards, you're just awarding it to them. Share options, you are giving them the opportunity to opt to become shareholders later. Okay, not now, but later. And you are giving the shares to them at a very fixed price or a current price. So you can say that, oh, the current price of the shares of the company is $10 or 10 cedis. So we are giving it to you at 10 cedis. You have the opportunity to become shareholder in 10 years' time. So in 7 years' time, the director can decide to become or can opt to become a shareholder, or they can opt to sell the shares. By that time, I'm sure the shares would have raised to about 100 cedis, and they will get that profit or that capital gain for selling those shares. We also learn about businesses and sources of finance, where we say that it's either a company goes to a bank, which will give them a short-term or a long-term financing facility, or they will go to the capital market and the money market. We discussed about financial intermediaries, discussed about banks being financial intermediaries. We went on to look at financial markets where we discussed the equity market and the bond market. Okay, so with the bond market, we have the domestic and the international bond markets. With the equity market, we have the primary market where um, the shares of the company are floated initially. That's what we call the initial public offer. The secondary market is where we trade it after the initial public offer. So we also went to look at the bond market. We said that there can be some local USD or local foreign denominated bonds, right? So the government of Ghana has certain local denominated USDs. Those are still domestic bonds. We also have international bonds, which we call Euro bonds. So about the money markets, we discussed interbank market, treasury bills, certificates of deposit, and the repo market. We went on to look at the money market. We looked at the purposes of the money market. Guys, this is 20 marks. So 10 from um, financial objectives, strategies, and financial objectives. We discussed money market where we looked at bills of exchange, commercial paper, and all that. We discussed bankers' acceptance, certificate of deposits, as I mentioned earlier. We looked at cash management. We looked at reasons for holding cash, transactionary, precautionary, and speculative reasons. The objective of a good cash management system is to hold cash that is not in excess of what you need. Okay, so the objective is that the cash that you are holding at the moment is enough to take care of your current liabilities, and they are not enough or they are not much in such a way that you are holding capital, right? Because you can invest those monies in investment vehicles that will equally grant you some interest. We discussed cash budgets and cash flow forecast. These are things that we know already. All right. So we looked at ethics here. This is the same as the ethics that we have learned already. All right. So if you remember, these are the agency conflicts, earnings retention, time horizon, risk aversion, risk minimization. We went on to look at sources of finance, where we said we have long-term sources, short-term sources. We discussed ways that new companies can raise funds externally. we looked at using debt, and we discussed convertible bonds and bonds with warrants attached. We said that convertible bonds give you the option to become, so even though you buy a bond, you have the option to become an equity holder along the line. So if you decide, or if you choose to become an equity holder, you give up your right of having a bond with the company, right? We discussed that the warranty is not like that. With that, even though you have the bond, you still have the chance to become an equity holder. We spoke about capital structure. We discussed gearing, financial gearing and operational gearing. So with financial gearing, we said that we are looking at certain ratios like the equity ratio and the gearing ratio, which are all here. We also spoke about income ratio, interest cover ratio. All right, so we discussed about how financing methods are going to impact the financial statement. When you go for a long-term loan, you are definitely going to book it under your non-current assets. If it's equity, it's going to add up to your share equity. If it is leasing, we know how IFRS 16 require accountants to account for lease. And we can also have some leases or lease or buy. As I said, please let's look at lease or buy very well because it is in the case. So let's briefly look at what lease or so this is borrow to buy or lease. Let's even move on. We are going to look at it when we are discussing the case. So we have looked at operational gearing, which we said is fixed cost divided by variable cost. I don't see any gearing related question, information in the case, but let's look at it. All right, so we came to investment decisions. We discussed about capital expenditure, investment appraisal, and capital budgeting. We spoke about the various methods of capital budgeting. That's the accounting rate of return, the payback periods, the NPVs. Before we discuss NPVs, we spoke about relevant cost. I can see some relevant cost in the question or in the case. That's what I said, that NPV is likely to come. But as I said, we don't know what the unseen is going to be like. We also have let's move into it. Let's look at what it is. So these are the methods. We have accounting rate of return, we have payback period. So with the payback period, we are looking at the time that it would take for us to recoup the cost of the investment. Okay. So here we consider just the cash flow. So please know how to compute these and know the advantages and the disadvantages, of the various models and methods here. Okay, remember we have discounted payback period where you have to discount the cash flows. All right, so we have relevant costs. Okay, so whenever you're undertaking a decision, you don't look at every cost that you have been presented in the information. You have to look at the cost that will affect the decision. Are we going to incur the cost if we undertake the project? If yes, then it's a relevant cost. As I said, I can see some relevant costing in the case. I'm sure most of us have also seen it. Okay. All right, so we are here once again to look at risk, which we have discussed already: risk identification, risk assessment. Hope you remember this: the risk mapping, risk transfer, hedging, diversification, risk control. Aside the financial consideration, whenever we are undertaking a capital intensive project, sometimes we don't just consider the financial aspects. We look at the non-financial aspects as well. So we looked at suitability, feasibility, and acceptability model according to Johnson and Scholes. Remember, we have spoken about this in our earlier lectures. That's yesterday. Even yesterday, I spoke about it. Okay. We also spoke about strategic considerations. All right. So when you're using MPV, a particular project might not be um, financially viable. Okay. But if you are able to undertake that project, it might come a long way increasing your market share. You understand? All right. You also have operational considerations that companies have to consider. We have measurements of quality. Okay, measurements of quality. So quality is subjective. What company A calls quality might be different from what company B calls it. Alright, so it might be quality itself where we look at the percentage of items rejected or scrapped. It can be speed, it can be dependability, flexibility, or the cost. Okay, the cost itself. We looked at performance through quality. Guys, please give me a minute. So let's move. I think we are taking a lot of time today. So we spoke about international financial management. I think we should look at this topic very well since we have some potential international investment in the question. Okay, so we discussed factors restricting foreign investments. All right, when you want to go to a particular company to go and make or to go and invest there, there are certain things that will restrain you or that will limit or make you think twice going there. We discussed all of them. The exchange rate and the restrictions on cash flows. You know, some companies or some countries have restrictions on repatriations. So if you want to move monies to your parent company, Ghana might tell you that you can't send everything. You might have to send 10% or 20%. You might have to pay taxes on them and all that. Okay. So we also have exchange rate risk. We have fiscal risk. We discussed all of these. I don't want to let us waste a lot of time. We also spoke about international investment appraisal, where we said we have the market perfection and market imperfection. Okay. We spoke about international sources of finance, where we discussed currency borrowing, which will, at the end of the day, reduce the currency risk in capital investment. We spoke about all of these. We spoke about transfer pricing. We spoke about tax planning. I mean, not into detail. Spoke about treasury management, where we looked at foreign exchange risks. We spoke about hedging, forwards, the money market hedge. We discussed the nature of interest rate risk. We spoke about swaps as well. Guys, let's move on. Today, I want us to look at the case. So, the interesting case that is going to be before us on the D-Day. Okay, so we finally came to corporate governance. Very interesting. Once again, we saw stakeholders here. We spoke about separation of ownership and control. Okay. Um, we spoke about certain concepts of governance: fairness, transparency, independence, honesty, which is called probity, responsibility, and accountability. We need this. No. Okay. So we discuss shareholders once again. Agency theory, guys, once again. The agency relationship, the conflicts, if you remember, moral hazard, effort level, risk aversion, time horizon, the agency cost once again. I'm sure they just copied and paste. Reducing agency, guys, they just copied and paste. So let's move on. All right, so we went on to look at other theories of corporate governance. Remember, this is 5 marks. The theories of corporate governance, just the theories is 5 marks, if you recall. So we have transaction cost theory, stewardship theory, resource dependency theory, managerial hegemony theory, and class hegemony theory. We also have the psychological and organizational perspective theories. We have the stakeholder theory, which we have discussed before, and the system theory. Let's please take our time to go through this. It's just short. The theories are just short. So let's go through them. All right. So we went on to look at corporate governance into detailed. Once again, we have principle based and rule based. Please don't forget. We have international statements of corporate governance principles. We have international statements of corporate governance principles where we said we have the OECD principles and the principles for corporate governance in Commonwealth. I'm sure most of us know the Commonwealth nations. That's the nations that were colonized by the Britain. I think this paper deals more with the OECD principles than the corporate governance in the Commonwealth principle. So, with the OECD principles, we looked at the content of the principles. So, the principle one is to ensure the basis for an effective corporate governance framework, the right and equitable treatment of shareholders and key ownership functions, institutional investors, stock markets, and other intermediaries, the role of stakeholders in governance. We spoke about disclosure and transparency. We spoke about the responsibilities of the board. We discussed the limitations of international codes or statement of principles. We said that there is nobody to enforce the principles here. Okay, so this wasn't a law that Ghana passed. It's a principle-based approach to corporate governance. So there is no institution that is going to enforce these. Okay, and we said that the OECD principle is for countries that do not have corporate governance principles. All right. So these are minimum standards for countries that do not have corporate governance principles. It means that it is not relevant to countries that have corporate governance principles. Okay. And yes, so that's what we spoke about here. We also spoke about the fact that the board is in charge of everything: finance, operations, marketing and sales, admin, everything. Directors are in charge because we said that they are in charge of governance. All right, so we spoke about the role of the board properly. we said that they can delegate some of their power to management, but they delegating the power to management do not mean they have been relieved of their accountability. They are still accountable to the shareholders. Okay, and we said that um, there should be a clear distinction between the owners of the company, the board of directors, and the executive management. All right. So the code of best practices of Ghana, okay, suggests that it is the duty of the board of directors, okay, to oversee executive management and how they conduct the business. It is also their duty to identify risks. Remember when we were talking about risk, we said that the board of directors are the sole or have the onus when it comes to risk management and risk identification. They are also supposed to oversee internal control systems. They are also supposed to make sure that succession planning, appointments, training, remuneration, and replacement of senior management are successful. Okay. They are also supposed to disseminate information to individuals who need them. All right. Okay. We spoke about the board structure where we discussed the composition of the board. We said that there is no law or no regulation enforcing companies to have a particular size or particular structure. Okay, but usually companies will have a chairman who may be an executive director or a non-executive director. Okay, aside the chairman, the chief executive or the managing director of the company might also be on the board. There might be other executive directors on the board, like the CFO, and also certain non-executive directors. Okay, all right. So as I said, we do not have any strict rule on the number of people that are supposed to be on the board, but the code of best practices suggests that for listed companies, the board should have at least 8 individuals and at most 16 individuals. We said that there should be appointment committee or there should be an appointment or a nomination committee on the board, right? We realize that apart from the board, there are certain committees that are formed from the board. Okay, there should be a nomination committee from the board who will suggest individuals who are qualified to shareholders. Okay, so the shareholders will pass a resolution to accept individuals on the board. So the nomination committee will nominate, and the shareholders will appoint a particular person to become a board member. We have executive and non-executive directors. Okay, so executive directors are people who are on the board who have managerial responsibilities. Let's say the CFO. The CFO is part of the day-to-day running of the company. So if you have a CFO on the board, you know that that person is an executive director. Okay, the CEO or the MD is also or on a board is also an executive director. Any person that have a managerial responsibility and that person being on the board makes the person an executive director. We have non-executive directors who are not employees of the company. They are not full-time employees of the company. They are non-executive. They are not part of the management of the company. All right. But there might be managers elsewhere. Okay. For instance, Jamila can be as chief financial officer of, let's say, Obsidian National Securities Limited. All right. So if Jamila is on that board or is on that board, on the board of Obsidian, it means that she is an executive director, right? Because of the experience and the skills of Jamila, she can be appointed on the board of another company, let's say ZPay Company Limited. When Jamila is appointed on that board, it makes her a non-executive director. Okay. We also spoke about independent non-executive directors. Ideally, whether you are an executive director or a non-executive director, you should be independent. You should have your own views when we are discussing issues on the board. You shouldn't be coerced. You shouldn't be forced. You shouldn't have any undue influences, right? You should speak your mind based on your experiences and your skills. But we have independent non-executive directors. All right. They have no special interest. They are not shareholders. They are not executive management. They are not employees of the company. They are not suppliers. They are not even consultants to the company. Okay. All right. So, once again, according to the code of best practices, a suitable board of a company which is listed should have at least 1/3 of the total membership being independent non-executive directors. In any event, there should be at least 2 people on the board as non-executive directors or as independent non-executive directors. These are not laws. These are not strict rules that companies are supposed to abide with, okay? But these are code of practices that companies can look at it and structure their board. We also have company secretaries. We said that, or we discussed that usually companies will hire secretaries. These secretaries are qualified company secretaries per the jurisdiction of the company. We said that it can be individual lawyers or it can be a company which is providing secretarial services to the board. All right. So we want them to look at separation of the roles of the chairman and the chief executive officer. We said that these are powerful roles, and the chairman ideally shouldn't be the chief executive officer. Okay. Once again, these are not rules. All right. But if the question asks you to suggest or recommend, you can say that the chairman shouldn't be the chief executive. So the UK Corporate Governance Code states that the roles of the chairman and the CEO should not be held by the same person. Okay, it shouldn't be, the position shouldn't be held by the same person. No individual on the board should have final say, should have unrestrained powers. Even the board chair should be restrained as to the level or the extent at which he or she can exert his or her powers. Okay, all right. So the Ghana's Code of Best Practices is also suggesting that ideally there should be a separation of the roles of the chairman and the MD, especially for listed companies. Okay, the role shouldn't be combined. One person shouldn't be there too. All right. So let's look at the roles of the board chair. So the board chair is to ensure that meetings are conducted regularly and they are conducted in a proper manner. Is responsible for provision of information to the directors prior to meetings. So if you check the case, you realize that there was going to be a board meeting and they had shared something, right? The agenda and the invitation to them. If you recall, it's in the case. All right. We have this comparing the responsibilities and the roles of the CEO and the chairman. Okay. We also have the role of the non-executive directors. They should have the necessary skills and experiences. They should bring on board independent views, because if we need to conclude on matters that are significant, the executive directors might be biased because they are part of management, right? So anything that affects management will also affect them. So when there are such cases, we call on the non-executive independent directors to make decisions on that regard. There is something like that in the case, we will look at it. Individuals should not accept an appointment as non-executive directors if they cannot provide the company with the time and the attention necessary to discharge their roles effectively. So this is a suggestion or a recommendation by the Code of Best Practices. If you check the attendance of the board in the case, you realize that there is one independent non-executive director who wasn't attending meetings. Okay, all right. So this is contrary to the fact that individuals who do not have time should be fired. Okay, you are brought on board to come with your necessary skills, your experiences to help the company. If you are not coming for meetings, then you should be sacked. Okay. Existing non-executive directors should advise the board chair and the secretary in advance of their intention to accept an invitation to serve on the board of another company. So if you are being called on another board, you have to tell the board chair and the secretary as well. So this is HEC's guidance for non-executive directors. They come on board because of strategy, because of performance, because of risk, and because of people. So non-executive directors should challenge constructively and help to develop proposals on strategy. As I said, executive directors will always fight in favor of management. So the non-executive directors come on board to make sure that what management is saying is actually not skewed towards them, because it might be something that is going to benefit them as management. And that proposal will be brought to the board by the executive directors. So the non-executive directors will come in and challenge those things, all right? And they will help them develop proposals that is of the best interest of the whole company. They also come to monitor the performance of the non-executive directors, right? We said that the board oversees management. So if all the board members are non-executive directors, sorry, they are executive directors, it means that there is no essence in having a board, right? Because the board is set up to oversee the activities of management. If you're having all your board members being executive directors, it means that you don't even need a board, because it's the same management you are created at the top level. Do you understand? So these non-executive directors come in to assess how well management are doing. Here, there's not going to be any conflict of interest because they are non-executive directors. They are not part of the day-to-day activities of the company. We have risk, we have people. They are responsible for deciding the cash, the salaries that we pay executive directors and other senior management of the company. Let's look at what indeed or what truly independent non-executive directors are. So they are individuals who do not have substantial shareholdings in the company. They have not been employed by the company in any executive capacity in the company for the preceding 3 years. So if Cephas was the chief finance officer for ABC Company Limited 5 years ago, Cephas can come on board as a non-executive or as an independent non-executive director because he hasn't been working there for the preceding 3 years. Right. Again, if Gabby is being appointed on a particular board, so let's say Gabby was working at ZP Company Limited, but he wasn't occupying any executive capacity. He was a normal finance staff, a normal finance officer, right? But Gabi has been able to, let's say, develop himself, gone to do masters, done CA, done CIT, done CFA. He's worked with other companies. Even though he comes before or he comes within these 3 years and he's appointed on the board, he's not going to be called an executive director. He's going to be called an independent non-executive director because he wasn't occupying executive capacity as at the time that he was working with the company. So also the individual shouldn't be a member of the immediate family of an individual who is or has been employed in an executive capacity in a company in the past 3 financial years. So Samuel might have his wife being the CEO. When you come like that, you are not going to be called an independent non-executive director because your immediate family is having an executive role in the company. So you shouldn't have provided financial advice or consultancy services to the company. You shouldn't be the major supplier of the company. You shouldn't have no significant contractual relationship with the company. All right. Okay. So before you join the board, remember how we spoke about or what we said about appointment of the board. So the nomination committee will nominate you to the shareholders. The shareholders will vote and accept that, oh, Sami should join us or should join the board of directors. If you join, we will induct you. We all know induction. We will formally orient you our meetings, the way we do things, and all of those. Because you might be a board member of a particular company, but how they do things there might be different from how we do it here. Aside that, there's going to be training for directors, regular trainings, and all that, so that they will continually develop in the area that they are using to help the company. So we have some criticisms of non-executive directors. They might not have the knowledge, okay? They might not get time to give to the company. And also, they might be there just nodding to what the executive directors are saying. They will say that, oh, you guys are here, you know what is going on, so whatever you say, I accept. But that is not they are supposed to do ordinarily. Okay. So also, these are best practices. These are not laws. These are not standards. With respect to meetings, the board is supposed to meet regularly. And if you are listed, you are supposed to meet at least 6 times a year. As I said, this is not a law. The committees are also supposed to meet. Okay. All right. So we have board committees, as I mentioned earlier. Board members will usually have committees under them, and the committee depends or is specific to the company. It's company specific, right? You don't expect companies to have the same committees. They will have the committee per what they need at the moment, right? So these people will report to the board and also make recommendations to the board. Okay, so there can be the remuneration committee, the audit committee, nominations committee, risk management committee. When I was teaching this topic, we looked at annual report of 2 banks, if you remember. So we went to look at the committees under these banks. Okay, let's look at the reasons for having board committees. I think this is very important to the case because we have a lot of corporate governance issues in the case. The board can use a committee to delegate time-consuming and detailed work to some of the board members. The board can delegate to committee aspects of its work where there is an actual or possible conflict of interest between ESCO, which is executive directors, and interest of the company and its shareholders. So when there is, or the executive directors have certain or have conflict of interest, we should have a committee, and this committee will comprise of independent non-executive directors, and they are going to decide to avoid the conflict of interest that the executive committee members are having. Remuneration of these guys, we have spoken about it already. So we also spoke about disclosure. Once again, when we were going through the annual report of CBG and Zenith Bank, we realized that an aspect of the annual report has corporate governance report. All right. So we said that the report should be in plain language. It should be understandable and consistent with previous reports. All right. All right. So lastly, we looked at financial reporting, audit, and internal control. So we spoke about financial reporting and corporate governance. We spoke about the audit committee. We have already looked at the audit committee when we we're discussing committees. Okay. So let's look at the composition of the audit committee. They should, so this once again is based on the code of best practices. They should at least comprise of 3 directors. These guys should be non-executive directors. The chairman of the committee should be a non-executive director. We can have the finance director of the CFO or the CFO on the board. And usually these are people who are finance oriented, all right? They are exposed to finance, they are exposed to audit. These guys recommend auditors. They recommend external auditors, okay? They liaise with external auditors for the purpose of ensuring audit quality. They will review the report or the annual report that the external auditors provide. So if you happen to be in an audit firm, you realize that when you finish your audit, you present your findings, you present the report, the audit report to the audit committee before you go to discuss or you go and present it to the board. Okay. So these are the roles and duties of the external auditors. I'm sure most of us know what they are supposed to do. We also learn internal control. Okay, so these are some internal control strategies: segregation of duties, fiscal controls, authorization and approvals, management control, supervision, arithmetic and accounting controls. Okay, so things that may not allow a particular control to work properly: human errors. Okay, so the control systems do not know errors, and you know that most IT systems or most systems are having the garbage in, garbage out approach. So if you make a mistake with your input, it means that whatever is the result will also be wrong. We also have overriding of control. Sometimes controls exist, okay, but management will do things to override it, okay. Oh, just write a check. We will sign the JV later. Do you understand? But the control is that you sign the JV before the payment is issued or before the payment is done. But when the CFO or when the CEO calls you that pay it as soon as possible, you might have no other option than to pay it. Okay. So guys, let's enough of this. Let's go straight into the case. All right. But before that, please give me 5 minutes. Give me 5 minutes. All right. So let's look at it. Please, I hope you can see my screen.
Yes, sir.
Okay, sure. So let's start. Hello.
Yes, sir.
Oh, sorry guys, I was muted. So let's start. Let's start. I was talking, but just realized I was muted. So Palm Wine Builders Limited, that's the name of the company in the case, and it is shortened as PBL. So I was saying that you can use this shortcut, when you are writing it without necessarily writing the full name. Okay. And I also said that let's write, okay, let's answer some questions. Okay. So if you have any more questions as you are learning, you can write, because those of you who are still students, we are fine. But those of us who are working, some of us, it's been a while we took pen and paper to write. Okay. And we need to answer about 10 questions. 10 questions, not we are not even counting the sub questions, so like 10 questions. It might even be more than that. We are answering them within 3 hours, so we have to be fast. Okay. So please let's write. Okay. So you can please don't use shortcuts. You can just use don't use shortcuts, so I beg you. And please try to be clear enough for the examiner to see what you are writing. So as I said, let's first of all read it. Okay, let's go through it. When we finish, we will start with the analysis. All right. But the final analysis will be done in our next meeting. And before I come to our next meeting, I'll try and get us some questions based on this case. As I said, these are not final questions because anything can change. Okay. This case is not what is coming. Okay. The unseen can change a lot of things. But I will suggest questions for us to answer. I'm not going to answer it with us, but I suggest for us based on this, what I think are going to come based on what the examiner is giving us. And we'll just have our time and go through them. I'll try and get the answers somewhere so that I will send it to us. So I'm reading it fast, then we'll come and start with the analysis. Wherever we get to, we'll continue in our next meeting where we'll analyze the case. We are going to take it line by line to look at it, what this can mean, what can come from here, what is the implication of this. All right. So in the vibrant landscape of Ghana's real estate industry, PBL stands as a beacon of excellence, embodying the ethos of creating homes for a lifetime, where a legacy that spans generations. Founded in 89, PBL emerged from humble beginnings, initially focusing on housing estate development. The company, which originally started as a small unquoted family business by Osman Boache and Bote Boache, focused on developing housing estates for the low income, middle income, and upper income market segments. The company is known for creating and delivering state-of-the-art, economically priced housing units in the attractive places with contemporary facilities and well-developed infrastructure on schedule. Over the years, the company has evolved and diversified, honing its expertise in a wide array of endeavors, including turnkey projects, comprehensive site development, encompassing road and drainage system construction, and the installation of water and electrical distribution networks. At the heart of PBL's enduring success lies its dedicated team of professionals, comprising both local talents and expatriates, who have consistently steered the company towards becoming Ghana's premier private housing estate developer. A hallmark of PBL is its unwavering commitment to punctual construction and the delivery of high quality, affordably priced housing units situated in prime locations. These developments are thoughtfully integrated with essential social amenities, meticulously planned infrastructure, setting the company apart. Delivered over 15,000 homes and affordability. PBL has expanded its footprint beyond Greater Accra with a notable presence in various communities within Accra and regions such as the Western region, the Ashanti region, and other African countries, including Sierra Leone, Gabon, and Mali. Its mission remains rooted in meeting the growing demand for meticulously planned housing communities within the West African sub-region. Notably, in 2015, PBL forged a pivotal joint venture with the Ghanaian Social Security and National Insurance Trust to embark on prestigious projects in largely home construction and major infrastructure development. This collab marked a significant milestone in the company's journey toward Ghana's urban landscape. Furthermore, PBL has solidified its reputation as a trusted partner in nation building, as exemplified by its successful involvement in pivotal government projects, including road construction and preparatory works for educational institutions. This track record of excellence has cemented PBL's role as a reliable leader to Ghana's infrastructural development. Furthermore, PBL has solidified, we have read this, in recognition of its commitment to quality and sustainability. PBL has strategically invested in enterprises dedicated to manufacturing international standard building materials. This strategic move has given rise to a family of esteemed companies, including Concrete Products Limited, PBL Tiles Limited, PBL Estate Management Company Limited, and PBL Deco Ghana Limited. These entities collectively contribute to the growth and advancement of Ghana's housing and construction industry. PBL has consistently set the benchmark for excellence in the housing sector, recognized for creating abodes that embody longevity and transcend generations. The company has diversified its portfolio to cater to various market segments. PBL is synonymous with delivering state-of-the-art housing units, meticulous designed and strategically located, encompassing a spectrum of housing solutions to suit diversified or diverse preferences and lifestyles. Among the arrays of residential options crafted by PBL, four primary classifications stand out: detached home, semi-detached home, townhouses, and condominiums. Each category is thoughtfully designed to address the unique demands and desires of prospective homeowners. Differentiation, offering a blend of privacy, community living, and a range of facilities. The detailed exposition aims to provide prospective buyers with a comprehensive understanding of these housing classifications, empowering them to make well-informed choices that align with their individual needs and aspirations. So we have the explanation of the detached homes, the semi-detached homes, the townhouses, and the condominiums. Visible inscriptions echoing the company's vision mission, and values can be found at vantage points within the premises and offices of PBL. So this is the vision statement of PBL: to be a transformative force in the real estate industry in Ghana and beyond, pioneering innovative solutions that transcend the ordinary. Their mission is to continually innovate and create sustainable living environments that harmonize with nature, exceed expectations, and endure through generations, committed to delivering exceptional value to customers, partners, and communities, driven by a passion for excellence and a dedication to a responsible development. So these are the corporate values of PBL. We have integrity, we have excellence, we have innovation, we have sustainability, and customer focus. We have legacy as well. Let's look at the overview of the real estate industry of Ghana as a whole. Ghana's real estate industry has emerged as a promising and lucrative market for both market and foreign investors. This industry's growth can be attributed to several key factors, including economic stability, rapid urbanization, favorable government policies, infrastructure development, and the thriving tourism and hospitality sector. Despite the immense potential of the sector, several challenges require urgent attention. The CAHF champions market intelligence, data, market analytics, and research to stimulate investor interest and to support better policy in the real estate sector in 55 African countries. The CAHF publishes annually its Housing Finance in Africa yearbook. An excerpt of the 2022 report on Ghana can be found below. Solutions for more affordable options for urban dwellers continue to be a challenge for the Ghanaian government. Despite this, Ghana's housing deficit witnessed a 33 reduction from 2.8 million in 2020 to 1.8 million in 2021, partly attributable to the real estate boom and a 72.8% in residential structures within the period. Guys, this should tell you that pestle analysis can go on here. In response to the affordable housing challenge, various organizations have made concerted efforts to increase the housing stock. As a result, the government has committed to completing existing housing projects and undertaking new ones across the country. The government, a political factor, don't forget. However, the unaffordability of the housing finance is exacerbated by weakened consumer sentiment resulting from the persistent increases in fuel pricing, increases in transportation fares, and rising inflation, which are undoubtedly contribute to the rise in the housing prices. Economic factor, threat, threat. All right. A majority of housing stock is sourced from the informal economy, mainly through incremental construction. Most housing in Ghana is owner occupied, especially in rural regions, with the highest share in the northeast, 90%. Generally, such properties lack market related property rights and they are less investable and aren't built with housing services. The rental housing market, on the other hand, has an urban character. Greater Accra has the highest proportion of households that rent units, so the margin is about 48%. Urban areas are characterized by land tenure insecurity, high transaction cost, convoluted property rights, and weak institutional oversight. In terms of investment opportunities, Ghana secured 75 million. Guys, they even mentioned opportunities. Ghana secured $75 million, that is about 604 million Ghana cedis commercial loan from the African Development Bank in October 2021 for Ghana Infrastructure Investment Fund to improve the financing and development climate, including affordable housing in Ghana. Green building requirements are specified in Ghana Building Code GS 1207/2018. IFC and Ghana Venture Capital Trust provide green housing finance and microfinance. So they are saying use the link here to download the full open access to the reports that we have mentioned. Let's look at the booming real estate, the trends and the headings. Ghana's economic growth and stability have positioned it as an attractive destination for real estate investment. The nation's steady economic growth, classified as a lower middle income country by the World Bank, has resulted from effective political and economic reforms. This stability differentiates Ghana from other countries in the region with higher levels of risk, making it a safe and secure environment for investors. Also, Ghana is experiencing rapid urbanization, an opportunity, with its urban population growing at an annual rate of 3.6%. This is a social factor, a social opportunity for the real estate industry. Guys, I'm reading but analyzing it. So please, as you are reading, connect every line to something because every line can relate to something. All right. According to the World Bank, okay, so this urbanization trend has led to an increased demand for housing and infrastructure, particularly in major cities like Accra, Kumasi, and Takoradi. The burgeoning middle class with higher disposable incomes has also contributed to the surge in demand for both affordable and luxury housing. You realize that demographic factors are social factors. So they are telling you that the middle class and people with higher disposable incomes have contributed to this. Okay, so this is an opportunity to the real estate industry. Okay, further, the Ghanaian government has implemented both affordable and luxury housing. Further, the Ghanaian government has implemented several policies to attract foreign investment and stimulate economic growth. These policies include low tax rates and tax holidays. Who implemented this? The Ghanaian government. This can be a political factor and an economic factor at the same time. I was telling you guys yesterday that usually or sometimes economic factors or political factors are economic factors. This is the government of Ghana reducing taxes, giving tax holidays. So it is coming from the political side, it is coming from the economical side as well. So you can write this point under both political and economic opportunities, profit repatriation, and land accessibility for foreigners. The Ghana Investment Promotion Center further facilitates investment in the country. It's also an opportunity. Ghana has prioritized infrastructure development, including transportation networks, power generation, and telecoms. The expansion of roads, new airport terminals, and port development have enhanced connectivity and opened up new investment opportunities across the country. Ghana's growing tourism sector has become a key driver of economic growth. Guys, everything I'm saying here is an economic opportunity. Remember, we are doing environment analysis. Everything here is now about PBL, right? It's about the industry. Okay. All right. Ghana's growing tourism sector has become a key driver of economic growth. Celebrities and tourists flock to the country to experience its rich cultural heritage and beautiful beaches. The BBC reports that an overall annual total of between 900,000 and 1 million tourists visited Ghana during the year of return in 2019. Think about it. Is this political? Is it economic? Is it what? This tourism growth has led to increased demand for accommodation facilities, creating opportunities for real estate investors in the hospitality sector. The appeal of specific neighborhoods, including Airport Residential Area, cantonments, and East Legon, is driven by factors like accessibility, security, and proximity to amenities. These neighborhoods can experience varying levels of demand, impacting property prices and competition. However, emerging neighborhoods like East Legon Hills, Wager, and Oibi offer significant investment potential. These areas are experiencing increased demand due to factors like commercial development, infrastructure improvements, and affordability. In terms of financing, the availability of diverse investment opportunities in Ghana's real estate, such as buy to let properties, property development, rent to own, and land flipping, can shape the industry's competitive dynamics. However, several challenges are hindering the rate of progress in the sector. You know that the guy is coming to talk about what threats. Notable among these challenges is land acquisition troubles. Despite the government's efforts to streamline land acquisition processes, there are still complexities and disputes over land ownership. Ambiguities in land titles, increased disputes, and higher acquisition costs, impacting overall industry competitiveness. Another challenge is the absence of well-established regulatory framework for the real estate sector. For the real estate sector, who is supposed to do this? The government. So you can say that this is a political threat. The lack of clear regulations causes inconsistent practices, potential fraud, and disputes. Why are we lacking clear regulations? A political threat because the government hasn't given any clear regulations. Again, the cost of construction materials fluctuates in Ghana, impacting the profitability of estate projects and economic what threat. For instance, the GSS report on inflation show that the construction of building industry recorded a year-on-year producer price inflation rate of 77% as of September 2020. So this is also backing economic threats. Economic factors like currency exchange rates and global material prices influence these costs. Everything here, economic factors, they are threats. The real estate industry in Ghana has unregulated pricing schemes. There are no clear guidelines for property prices, rental rates, or service charges. Developers' charges are based on production cost and demand. Such practices often lead to exploitation, especially in a country with a high housing deficit like Ghana. Moreover, the rise of online portals for real estate listings such as Ghana Property Finder, HomesGhana.com, Aka Kappa, Tonaton Gigi, Jumia, and Mekasa has transformed the way properties are marketed and sold. A technological opportunity. We get it. These online platforms, they relate to tech, and it's an opportunity to the real estate. These platforms provided increased transparency and accessibility to property information. Nevertheless, they also pose challenges related to authenticity and online scams, which affect trust and buyer confidence in the industry. This is a threat. Scams, a threat, technological threat, because it's as a result of the technology that the scams and the frauds are coming in. Another major challenge emerging in Ghana's real estate sector is money laundering. Money laundering, in the opinion of many, poses a significant threat to Ghana's real estate sector. Illicit funds obtained from criminal activities, corruption, or tax evasion funneled into the real estate market affect property values and the integrity of transactions. Money laundering not only distorts property valuations, but also undermines the transparency and credibility of the industry. Among other factors, money laundering can inflate property prices, impair veracity and trust in the sector, raise regulation barriers, and influence reputational risk. One symptom of growth in an industry is that it becomes highly competitive. Although the construction sector is small in Ghana, it has already become very competitive with major players in several market entrants from Benin, Togo, Chad, Nigeria, and Mali. Edward Afenya, CEO of Trust Group, told Oxford Business Group. PBL, we've come back to PBL. PBL could be said to be operating in a hyper-competitive environment. Guys, I'm not analyzing the case, but please go and look for this, all right? Just take your case study and Google this. There are certain things that firms are supposed to do in a hyper-competitive environment. As I said, this is not the questions that are coming, but please go and read it. The building industry business environment in Ghana has become uncertain and dynamic with aggressive competitors constantly changing current assumptions and methods. So let's look at the operations and governance of PBL. The following meeting documents give an indication of the operations and governance of PBL. The company's secretary has circulated the notice of meeting invitation to the board and other parties for an upcoming meeting as follows. So this is to the board members, the mail, the details of the mail and all that. So let's look at the additional materials that she attached. Okay, so she said that your presence at this meeting is of utmost importance. If for any reason you cannot come, notify the secretary. As I said, a secretary can be a company or an individual. Here we have an individual being the secretary. If you are unable to attend the meeting in person, you have to alert Akoto or Benson to arrange online participation for you. Kindly confirm your attendance or send apologies not later than this date by replying to this mail or contacting the company secretary. Your active participation and then. So let's move on. Let's go and look at the materials. So minutes of previous meeting. So we have the board members. Let's look at the board members that were present. We have Osman Boache, board member. Bote Boache, board member. Siddharth Raja, board member. Melissa Johnson, board member. Edward Boadi, board member. Guys, have you guys seen these names before? Osman Boache, Bote Boache. Who are they? They are the founding members of the company. It was founded in 1989 by who? Osman Boache and Bote Boache. Please, someone. Hello. Please go on.
What time is the meeting?
Come again.
Meeting.
Matthew, your line is not clear. Hello, Matthew.
Type the question.
Come again.
No, I was telling him to type the question. His line is not clear.
Yeah, it's not clear at all. All right, so let's continue. Ask Matthew types his question. All right, so as I said, these guys are who? The owners. Okay. All right. So once again, you look at separation of ownership and control. All right. So we have two people who were absent: Mita Bhattacharya and Ado Konedu. Right. We had other people in attendance of the meeting. We had the head of quantity surveying, the head of projects, and also a project consultant. Okay. All right. Now, the meeting recommended that. So let's look at the executive chair's report. The meeting recommended that the company should expand its operations into Burkina Faso. So that's why I said Porter's Diamond. Porter's Diamond. Porter's Diamond. We are not moving to a region in Ghana. No, we are going to Burkina Faso. After a brief discussion, the board agreed. However, the board could not agree on the most appropriate means by which PBL should use in entering Burkina Faso. Ha. So, methods of development. Okay, so your ANSOF's model and all the other models there, are they supposed to use the market penetration? Are they supposed to use market development? Are they supposed to use product development? Are they supposed to use differentiation? So guys, this is an automatic question because the board could not agree. If they could not agree, they are coming to ask you because you are going to be their consultant to help them. But the thing is that we don't know which model the examiner is going to ask. So we learn all the models. Okay. That's the sad thing here. Staff members, Mrs. Felicia Boche and Mr. Azuma Tete attended the African Climate Summit in Nairobi. Here, sustainability should start coming in your mind. Last month, and gave a brief extemporaneous presentation. Both are invited back next year to give a longer presentation about the organization. After a brief discussion, the board congratulated Mrs. Felicia Boche and asked her to pass on their congratulations to Mr. Azuma Tete as well. So the motion is to adopt climate smart building technology, which was seconded and passed. As part of the motion, a consultant specializing in eco-friendly construction methods and materials is to be engaged. Sustainability question is definitely going to come. The motion to task the risk committee to investigate and recommend ways to reduce capital lockup in unpaid projects was seconded and passed. So this is a motion for the risk committee to investigate and recommend ways of reducing capital lockup in unpaid projects. Who is the risk committee going to contact? You. So please take note. Sierra Leone, Gabon, and Mali branches have experienced significant growth in profit over the last 3 years. The country managers, then you start thinking about the EPRG framework, how organizations see the world as a whole. The country managers of the 3 countries have been recommended for a special bonus. Currently, the parent company in Ghana makes major decisions, especially for budget items above 500 million. Marketing and sales strategies are deployed from Ghana to these countries. Marketing and sales strategies are deployed from Ghana to these countries. Guys, don't forget corporate parenting. corporate parenting. Don't forget centralization and decentralization. Motion is tabled to decentralize operations and increase the level of autonomy. Don't forget Greener's model of internal development. Don't forget advantages of decentralization, because they are going to ask you. Motion is tabled to decentralize operations and increase the level of autonomy. How is this going to benefit the firm? Learn advantages of decentralization. Learn disadvantages of decentralization. Know what centralization and decentralization mean. As I said, the question can come anyhow. You know, even though they are talking about decentralization, the examiner can ask you, why do you think they should still use the centralization approach? Here, you're not going to talk about decentralization. You're going to talk about centralization, right? So master it. A section of the board thinks the company will lose control and country managers will have more power. Do you guys remember the Greener's model? Greener's model, the growth phases, where we said that it starts with creativity, there will be crisis for leadership, then delegation will come, crisis of control, then another one will come. They are saying that they are scared of losing control and country managers will have more power, which may heighten management buyout when political factors are ripe. So please, Greener's model, take note. This is not even the analysis, but because we are almost done, that's why I am taking my time to look at this. The motion was subjected to a vote of 3-2 in favor of decentralization. Decentralization has come here again. Let's look at the Finance Committee report. Mrs. Mita Bhattacharya, in her absence, the Vice Chair, Mr. Siddharth Raja, explained that the external auditor, Mazarat, reviewed the organization's interim accounts and found them to be satisfactory in preparation for the upcoming yearly financial audit. Mr. Siddharth Raja reminded the board of the need to pass the new compensation schemes agreed upon with labor unions leaders to cushion workers from the harsh economic impact in Ghana. After extensive discussion on the impact of the decision on the financial position of the company, the motion to implement the new compensation scheme was deferred to the next year. Conflict between stakeholders. Why was it deferred? Conflict between the various stakeholders. Mr. Siddharth Raja and Mr. Edwin Boadi were nominated to meet and renegotiate the implementation date with the labor union leaders. Why board committees are important. Importance of board committees. The Risk Committee reviewed highlights, trends, and issues from the statement of financial position, statement of profit or loss and other comprehensive income, statement of changes in equity, and statement of cash flows. Issues including capital lockup in projects and high account receivables require immediate attention to policies and procedures to ensure the firm receives more payment on time. To ease the looming liquidity challenges, guys, learn about ways of reducing liquidity challenges. After a brief discussion of the issues and suggestions about how to increase project turnover, motion to accept financial statements was raised, seconded, and passed. Mr. Bote Boache reminded the board of the scheduled management retreat coming up in 3 months' time. Retreat, board training, and induction. Remember, we spoke about it today. Please look at it. And provided a drafted retreat schedule for the board review. Motion to accept the retreat agenda was seconded and passed. Mr. Bote Boache presented members with a draft of the bylaws paragraph that seeks to change the board dynamics in terms of size, function, duration, compensation, and conduct of meetings. Mrs. Melissa Johnson suggested a review and resolution to change the bylaws accordingly. Mrs. Melissa Johnson suggested that Mr. Bote Boache first seek legal counsel to verify if the proposed change is consistent with best practices. They are not saying laws, best practices. Mr. Boache Bote has agreed to accept this action and notify members of the outcome in the next board meetings. Guys, what are they doing? They are looking at the size. So go and look at what best practices are saying about size of board of directors. Their function, look at it. Duration, look at it. Compensation, look at it. Their conduct of meetings, please look at it too, because Mr. Bote Boache will come to you. The statement or the question, the case says that he agreed to accept this action. Which action? Seek legal counsel. You are the lawyer, and notify members of the outcome in the next meeting. So you are going to give the outcome. Other business. Mrs. Felicia Boche noted that a new road consultant expert, Mr. Skanda Khalil Omar, has been engaged for the previous meeting resolution. Skanda will be providing consultancy services for the company in the contract between PBL and the government of Ghana to construct a 52-kilometer dual carriage road between Adenta municipality and Somenya. Mrs. Melissa Johnson raised a concern about how the outcome of the 2024 general election in Ghana may affect the project, especially when there is a change in government. The risk committee was tasked to assess the risk of the project and report in the next board meeting. Guys, we are going to be by force risk committee members, because they are going to ask us to assess the risks involved in this, the acceptance of the contract, especially with respect to the general election. Please. Mr. Bote Boache asked members for their opinions on hiring a consultant for the climate smart buildings that have been approved. Note, Mr. Edwin Boedi noted that he owns an eco building consulting firm and was concerned about a conflict of interest in his board role regarding this selection and asked to abstain from this selection. The members agreed. The majority of the members agreed on lease or buy consultants. Motion to use lease or buy consultants, seconded and passed. Like, the guy is tricking us. Lease or buy consultants. That's the name of the company or the consultants that are coming in. Lease or buy consultants. Probably they are bringing lease or buy options for them. That's why I want us to check lease or buy very well. Mrs. Melissa Johnson noted that the monthly meetings are too many and increase the company's spending on board members. She suggested a reduction of board meetings to 6 times a year. If you recall, when we were doing the best practices for board meetings, we said that for listed companies, they are required to meet at least how many times? 6 times. So she suggested 6 times to cut down meeting allowances and other incidental benefits to the board. Additionally, she raised concern about the past 3 meetings that have run over the intended time slot by half an hour. Guys, look at how board meetings are run according to best practices in the book. She asked members to be more mindful and focused during discussions and suggested that the board development chair take actions to identify solutions to these issues. So the best practices will give you that solutions. The chair agreed to do it. The chair will come to you on the strategic case study day. So the meeting was adjourned. The minutes was submitted by the secretary. So we have balance scorecard as another attachment. So from my view, the examiner is going to ask us to discuss this, okay? To discuss this. So one of them might be targets, one of them might be actual. One of them might be target, one of them might be actual. So I'm sure here the examiner was writing target somewhere and actual somewhere, because we have 2 rates here or 2 indicators here. So with financial indicators, with financial indicators, increased company profitability. We have the increase in net profit margin and the increase on capital employed. So guys, I'm not here to teach you ratio analysis. So know what the strategic objectives are and comment on the target. So if it was a target and actual, you say that, oh, they did well or they didn't do well. If they did well, you can suggest ways or you can suggest reasons why they might have done well or reasons why they might not have done well. Okay, so I'm sure the ones here are the ones here, the 12, 30, 35, 80, and the 2.1 are the targets. Why am I saying that? Remember when we were looking at the case, we realized that there were capital lockups. So they wanted to reduce capital lockups in the project. But this is 5-1, which is more than 2-1. So I'm sure this will be the target and this will be the actual. So here, the examiner will ask us to comment. So you are commenting on the financial, customer, internal, and the learning aspect of balance scorecard. So minimum, please know this, all right, and comment on this. You know, some of them, they told us the initiative that they did. Okay, so here they told us that they did customer rewards projects, which had about 5,000 USD initiative. So you can use this in your explanation, right? So it's time, but let's look at this before we go. This is the attendance of the board, right? Remember we said that non-executive directors should have time for the company. If they don't, we should sack them. This guy is an independent non-executive director. February, she didn't come. March, she didn't come. April, she didn't come. May, she didn't come. June, she didn't come. Don't you guys think there is something that you have to do here or you have to say here? This guy too, he missed a lot of the meetings, Mr. Adokonedu, right? So this might seem like a normal attendance, but I might be saying something. Okay, all right. So this is our brief run of the case. God willing, in our next meeting, we are going to take it line by line, say that, oh, this line, this can come, as I was doing at the later part of the case. I'll also send you guys questions based on this so that we look at it and we try to go through them. Matthew's question never came. Okay. All right. So I'll see you guys in our next meeting. And yes. Thank you guys very much and have a good evening.
Thank you, sir.
Please, when is the next meeting? Good evening. Good evening.
Good evening. So per the timetable, the next meeting is supposed to be 29th. It seemed very far, okay? So I am working on bringing it forward, all right? So let's see. If I am able to bring it forward, it will be communicated to us. If I am not,
Please, where can we get a recorded version? Or
so the recorded version is on the page.
okay,
Yes, the page that you guys were added to.
okay.
So yesterday's recording is there. Today's recording will be there, and
Right.
our next meeting will also be there.
Thank you very much.
All right, thank you too. All right, guys. So please, at least I mentioned certain things about the case. Please take note of them and go through them. Okay. Please know the models. As I said, the case is not conclusive. That's not what is coming. So please go look at the models. We are going to be fine. Trust me, we are all going to be fine. All right. I'll see you guys when we meet again. Bye-bye.
Bye.